Hello, good morning. You're watching Market Cafe on ET Now. I'm Vinny Motiwala and with me is Shreyanti Singh. And this is a show where we will take you through all the updates that have happened in the global market and what you all should be watching out in the Indian markets after 9:15 a.m. What's going to be important? That's all that we'll be talking about in the next 1 hour. Shreyanti, when we talk about the markets, we've managed to see Dow Jones, S&P 500, US markets managed to close in the green. What was the handover overall? Other than that, how was it looking like?
Absolutely, and it's very interesting the kind of handover that we're seeing. It remains to be seen whether the rally can sort of broaden from tech names, etc. But right now, what you're looking at is Dow Jones as well as S&P 500 futures nearly flat. But then when you look at the regular day trading session, then what you had was the S&P 500 as well as the Nasdaq Composite saw new record-setting closes on Tuesday afternoon. The broader market index added about 0.3% thereabout, and when you look at the tech-heavy Nasdaq, that also gained 0.2% thereabout. Now, when you look at the Dow Jones Industrial Average, that added about 0.2% as well, and Nvidia was the name that was at the forefront of investors' minds as they looked ahead to the semiconductor giant's quarterly report on Wednesday afternoon US time, and the stock has rallied nearly 93% so far this year and added also about 0.6% during Tuesday's trading session itself. So those are the kind of moves that you've seen for Nvidia, and that is something that is definitely adding a lot more support to the tech-heavy Nasdaq. Now the market rally has the potential to broaden, like I said, but then of course you do have a whole host of earning counters that are on the radar for this particular thing as well. So you do have companies like Target, Analog Devices, TJX, Raymond James Financial Services as well. So all of these are slated to be reporting their results as well. Let's see how that happens. There's FOMC meeting minutes as well, and April's home sales data as well that will be on the radar for investors. When you look at what happened with Europe, then European markets closed a tad bit lower, a shade lower when you look at the stocks 600 index as well, down about 0.2%, and DAX also similar moves coming in, down about 0.2%, but that largely is the handover coming in from US and Europe as well. But then what you're seeing right now is oil is drifting a little bit lower, isn't it?
Absolutely, oil is drifting a little bit lower. Gold is below that, peak levels that we saw yesterday. So yes, we're keeping an eye out on the commodity front as well. So let's just look at why oil prices are falling. Now, in early morning trade, we're seeing a bit of a decline for these oil prices, especially given that there's a build-up in terms of US inventory. So there's more inventory than what is the demand. That is a surprise that came in there. Other than that, there's a persistent concern about US's interest rates, that could remain higher. Commentary keeps coming in that, they'll not rush into taking those interest rate cuts. So these are the factors that are, impacting oil as well. Geopolitical tensions that are continuing. So that's a bit of a worry that comes in on that front. And overall, when you look at it, oil seems like it's going to be heading for a fourth straight session of decline that we could see for the Brent crude oil prices. And obviously sluggish demand, concerns about geopolitical tension, like I mentioned, in the Middle East, are obviously factors that seem to be a bit of a worry. Other than that, yes, the slight bit of an optimism when you see in terms of the China economic recovery. So if that overall industry recovers and the country is recovering, then that's something that we're watching out for. That's a slight bit of a positive, but apart from that, concerns are looming in over there. Let's talk about gold prices and where gold is trading this morning. Gold is at 2,425. Muted day and muted start that's coming for the gold prices, cooling off from those peak levels like I mentioned as well. So let's keep an eye out on gold. Silver also managing to see a bit of a gain again today, up 0.6% at this morning trade as well. And silver is something that has been shining apart from gold. So yeah, keeping an eye out on those metals, but yes, interesting move coming in there. And moving on, let's actually talk about gasoline reserves, right? And talking about that oil and gas, Biden administration will be releasing 1 million barrel worth of gasoline from reserves in the Northeast in a bid to reduce the prices at the pump. Now, move comes ahead of the 4th of July holiday and the summer driving season. Overall, remember, gasoline futures have rallied as much as 19% this year, with OPEC cutting oil production and geopolitical disruptions to supply in the forefront. So yes, that's an update coming in on oil and gas.
Absolutely, and there's a host of events that you should keep an eye out for. Now, in terms of the global cues, of course, you do have from the US API weekly crude oil stock data. as well as, like I mentioned earlier, existing home sales data and FOMC meeting minutes that the market will be keeping an eye on. In terms of things that the market is keeping an eye on in terms of the earnings calendar, today you do have Grasim, Sun Pharma, as well as Power Grid reporting their numbers, and tomorrow, of course, there's ITC, so all eyes will be on that as well. Now, in terms of corporate action, PG Electroplast board will be mulling stock split. So that counter will remain in focus, and so will Power Grid on account of that income distribution to PG Invit. Now, it's the last day to buy a host of counters for interim or final dividends, so the likes of Trent, GE Shipping, SBI, Sula Vineyards, Oberoi Realty, and Colgate. So all of those counters will remain in the spotlight. And Office Space Solutions also opens for subscription on the primary market front. So that one will be important to watch. Now, in terms of other cues, we've of course told you about Nvidia's earnings, but then you also have ECB President Lagarde, and her speech will remain in focus, and FOMC's Bolstick as well as Mester and Collins are also scheduled to speak. So those speeches will also be something that the market will be looking out for, isn't it?
Absolutely, and talking about the speeches, we did have that commentary actually starting to pour in from the ECB's Lagarde as well as Fed's Waller. And talking about that, the commentary overall from ECB's President Christine Lagarde says that she's really confident that the Eurozone inflation is under control, even amid the impact of the energy crisis. Now, ECB has all but promised a rate cut on 6th of June. So, policymakers have shifted their attention to debating where the rate cuts will go thereafter. Now, Lagarde has also continued to say that and reiterate that inflation forecast for the next year and the one after that is getting close to their target. If not at the target, it's at least getting close over there. Let's move on to the commentary that came in from Federal Reserve's Governor Christopher Waller, who cites that stirring of recent inflation data to say it is on track and appears to be easing. Waller's comment also comes in and says that at a time when consensus among officials have said that largely will be holding the interest rates, and such a time you're getting such a positive commentary, that's something that one should watch out for. Waller is also believing that it won't be necessary to hike the interest rate any further, and however, the policymaker added that he will need some convincing before they come back to those rate cuts anytime soon. So yes, keeping an eye out on that. It's a slight bit of a positive commentary, at least from one of the Fed officials.
Well, absolutely, and let's switch focus to a landmark move. Then the European Union member states have given a go-ahead for world's first major law for regulating AI as institutions around the world race to introduce curbs for the technology. The EU Council said it had approved the AI Act, a groundbreaking piece of regulatory law that sets comprehensive rules surrounding AI technology. With this law, the Commission will have the power to fine companies that breach the law as much as 35 million euros or 7% of their global revenues, whichever is higher.
Let's move on, and animation major Pixar announces that it will be laying off 175 employees. That amounts to 14% of the studio's workforce. The cut comes as CEO Bob Iger works towards his overarching mandate to focus on quality of its content, not the quantity is what he's focusing on. He's laying off other layoffs than Disney business last year, but Pixar cuts were delayed because of the production schedules.
All right, moving away from that, then US Treasury Secretary Janet Yellen has also said that the US and Europe need to respond to China's industrial overcapacity in a strategic and united way. Now, she added that G7 finance ministers share US concerns about Chinese efforts to dominate clean energy industries, but did not need detailed coordination or on trade actions following the imposition of steep US tariffs on Chinese goods. Not just China, she also urged that European banks to step up efforts to comply with sanctions against Russia.
Talking about some bit on metals on the tear on the back of several tailwinds in the Sun Zinc. Vedanta take the index above the 10,000 mark, and this is for the first time ever. We spoke to Vandana Bharti, research head of commodities of SMC Global, and to get her viewpoint, what is she expecting there? Listen in.
Fed goals for rate cut in the month of September 2024, and the process continue in 2024-2025. It will give some kind of stimulus some kind of improved activities in economy, and it will create more demand for copper and other kind of base metals. And the underlying trigger is that de-dollarization by BRICS and inflation, because copper is negatively correlated with dollar index, but yes, it is very positively correlated with CPI or CPI in US. So till the time we can see that, okay, CPI is higher side in US, we can expect that copper will perform in the higher side only, in higher territory only. And the de-dollarization is mainly responsible for the upside in one of the major reasons for upside in gold prices, as well as the base metals prices and all industrial metal prices.
All right, then that's the word coming in from Vandana Bharti about the commodity space. But then with that, let's take a quick break. When we come back, we'll take a look at how the Asian markets are faring.
Welcome back. You're watching Market Cafe on ET Now. Let's get more domestic, talk about more Indian companies. And the Bombay Stock Exchange has scaled to new milestones. Listed companies' market capitalization surpasses $5 trillion mark, underscoring the ongoing rally in the market. Let's go across to my colleague Snehi Shah, who's put across a perspective for us on all of this. Snehi?
Well, yes, it's a new record coming in for the BSE, because the market cap of the companies listed on BSE has crossed a record $5 trillion for the first time. The market cap is up by $633 billion alone from the start of this year. And the BSE mid and small cap indices have hit fresh highs as well, although on the flip side, the Sensex is still 1.6% below its all-time high. Now, what's interesting to note is BSE's market cap journey over the last few years with each trillion. Let's take a look. It's a very interesting journey. $1 trillion market cap, $1 trillion market cap was reached on in May 2007. Then to increase that by 1 trillion, the second trillion took almost 10 years, because that mark was hit in July 2017. Then the market cap hit $3 trillion in May 2021, which is a gap of 4 years from the previous trillion. $4 trillion BSE hit that in November of 2023, which is very recent, and that was a gap of 2 years compared to the previous trillion. And well, now the $5 trillion mark has been hit right now in May 2024, which is a gap of just 6 months from the previous $4 trillion mark. So interesting moves coming over there when it comes to the market cap of BSE. But well, yes, fresh highs coming in for the market cap of BSE, crossed $5 trillion for the first time.
All right, thanks Nehi for that update. Moving on then, PM Modi highlights the feat of the Indian stocks market in the past 10 years, becoming the fourth largest globally. This amid the India VIX hitting higher levels, touched 22 for the first time in over a year intraday yesterday. But companies listed on the Bombay Stock Exchange have hit another milestone, $5 trillion in the market capitalization. So what cues should investors take away from these developments? Then take a look.
आप देखिए 10 साल पहले शेयर बाजार कहां था और आज कहां है। आज देश के लाखों लाख छोटे छोटे निवेशक बाजार से जुड़े हैं। दुनिया के 4th लार्जेस्ट स्टॉक मार्केट पर देश दुनिया का भरोसा बढ़ता जा रहा है। मैं पूरा हिंदुस्तान घूम के आया हूं और मैं विश्वास से कहता हूं, इस बार के चुनाव नतीजे पुराने सारे रिकॉर्ड तोड़ने वाले हैं।
Stability of government is the first criteria for markets to be efficient. Stability of government, stability of policy, particularly of taxation policy. Most investors who come to visit India today are keen to see where their money can be placed or parked. India's financial markets have far exceeded everybody's expectations in the recent past.
It's very clear where the election is going. The exact number people may have a debate. In democracy, they should be debating it also. But I'm very sure as round after round takes place, markets will be less and less volatile, because the markets will see exactly what those numbers, or will get a sense of, where those numbers will end up. And I'm very confident those numbers will end up very, very good for us.
If you are a long-term investor with 10, 20 years view, stay in the market. If you have a 2-year view, it's a great time to take some money out and sit in your bank account. If you've got a kid's exam to be paid, fees to be paid, or something like that, come out, keep the cash in your hand. Markets have always been talked up by the then government, right? But sometimes the market chooses not to listen. So you have to be careful about the fact that the market does not listen to anybody. It has its own mind. And after it comes down, people will say, fairly obvious, no, how long can the bull run be? So difficult to think that the market will listen to the big bosses. It may not.
We are exactly 2 weeks away. 2 weeks from now, around this time, it will be very clear what is the composition of the new Lok Sabha, and markets would have got a lot of reassurance. So, political continuity is important. What should you do next 2 weeks? I think staying on the sidelines is best. Taking a view on the market based on such a large event is not really worthwhile. But being out of the market is a very big risk. So I'm not saying that you should sell, but I'm saying the regular money that you put in every month, that by all means continue to do.
Okay, let's move on. And the SEBI has issued a fresh guidelines to manage the stock market impact arising out of the market rumors. Ankur Mishra is joining with us to give us more details on what this actually entails and what are these fresh guidelines by the SEBI. Ankur?
Yes, after the suggestions which were made by Industry Standard Forum, SEBI has come up with the concept of unaffected price in the norms of market rumor verifications. Remember, these norms were released earlier, which was supposed to be implemented from 1st of June. But one of the apprehensions of listed companies was that suppose there is a preferential issue, there is M&A which is going on. If they confirm the market rumor, if they confirm the news, there will be certain price movement. So how should they deal with that? Now SEBI has come up with the concept of calculating this unaffected price, and after that this can be valid, this price can be valid even after market rumor verification by the listed company, and that validity may be from 60 to 180 days depending on the criteria of calculation and implementation of unaffected price. So now that companies needs to implement, top 100 companies needs to implement these norms by 1st of June, and top 250 companies needs to implement these norms by 1st of December. One of the major concern has been allayed by the regulator, and unaffected price will be applicable as and when this kind of case fits in. So these market verification, market rumor verification norms, whereby company needs to disclose within 24 hours of any rumor which is floating around. Now this will be applicable, but the companies are shielded with unaffected price.
All right, thanks, Ankur. So that's the update coming in as far as SEBI's market rumor verification guidelines go. But let's move on then onto some macro news. India is expected to perform better than the global economy. This is per the latest RBI bulletin. And it also highlights the recovery in rural demand. Astha is standing by with more details on this. Astha?
While the Reserve Bank of India came out with the RBI's bulletin on the state of economies, and it provides the outlook, the mixed outlook for the global and the Indian economies as well. The global economy, on the other hand, faces challenges with a fragile outlook due to the volatile capital flows, and also the investors are reacting to the uncertainties in the market. On the brighter side, there is silver lining talking about the Indian economy. There is a growing optimism about the Indians' potential for a long-awaited economic takeoff. Also, the recent indicators points toward a quickening momentum in the aggregate demand. The demand is quite up, taking an uptick for the consumers, retailers, and the wholesale section also. Also, the recent indicators suggest in a pickup aggregate demand driven by the recovery in the rural spending. With the rural spending playing a key role in pushing the non-spending. So there, the rural demand is also picking up and the aggregate demand is also picking up, keeping aside the non-food spending as well. The modest easing of inflation is the very big factor of the economy building up its high road. Also, the inflation which we saw was very, very much in the back of years. Now it's ending ease, and the RBI report suggests that the indicators are seeing that the modest easing of inflation suggests it's on track to meet the targets as well. Also, the RBI bulletin acknowledges that the inflation on the track, it meets all the demand, whether it's consumer based, retail based, and wholesale based. On the other hand, but the global economy is seeing a little bit of lag as the investors are not keen in investing too much of the uncertainties. But there is a silver lining. The Indian economy is paying its way towards the top.
Okay, thank you so much for that update over there, Asta. But on that note, let's just slip into a very short break. Don't go anywhere, because after the break, we'll be talking about which are the important stocks that you should be keeping on your radar. Welcome back, and you're watching Market Cafe on ET. Now let's get more stock specific, and first stock that we're going to talk about today is going to be Dr. Reddy's. Why is Dr. Reddy's in focus? They've inked a $67 million deal, and this is with Avlotech biosimilar for its key markets. So they are going to be Avlotech's biosimilar, that is a denosumab. That is what they will be delivering in the key markets. That's going to be US, Europe, as well as European, as well as the UK markets. Now obviously there are two brands that they will be dealing with and collaborating on. They would obtain exclusive commercial rights for this in the US markets. This is a semi-exclusive right for the Europe and UK market. While in the US, it's an exclusive market. Europe and UK, like I'm mentioning, reiterating that it's a semi-exclusive right market. Now what they are expecting out of this, they expect to pay around 38 million upfront fee, and the future milestone based on the payments of up to 29 million to Avlotech. So keeping an eye out on that. Overall, what you're seeing in terms of the two brands, Prolia, that is a $2.5 billion market in US and $1.6 billion in the rest of the world market. That is for one brand. And Exgeva is a $1.5 billion in the US market, as well as in terms of overall the rest of the world, it's a $0.5 billion market. So yes, we're keeping an eye out on this. They're expecting that this could start contributing in terms of the revenue from FY26 onwards. As per analyst Nuvama, the brokerage firm, they said that this agreement could actually provide a boost to the US sales for the company in FY26. And if Dr. Reddy's and Avlotech receive the approval in time, that's when we'll start seeing the benefits sooner. That's in FY26. It also will help Dr. Reddy's to partially pacify the concerns of the US growth that is post the Revlimid generic side, and that is something in FY27 that everyone was concerned about. But those concerns will ease off if this actually starts working out on time, in time approvals come in for this collaboration as well. Then yes, Dr. Reddy surely should see an uptick today. $67 million deal is what they have signed to commercialize Avlotech's biosimilar in some of their key markets.
Well, absolutely. We'll keep an eye on Dr. Reddy's and trade, but FAME Industries, Dollar Industries and Action Construction have also posted a strong set of earnings for the quarter gone by. It'll be key to watch their reactions as well, but Ashesha is standing by to give us the earnings roundup.
Well, yes, first let's talk about FAME Industries. It has reported very strong set of numbers, outperformed expectations across all parameters. Revenues have seen an uptick of about 28% on a year-on-year basis. Margins have contracted a tad bit to about 13.5%, but the company continues to report industry-leading margins. Analysts are very bullish on the outlook going forward. They say that a recovery in two-wheeler industry is imminent, and players like FAME will continue to benefit on account of this two-wheeler recovery that is expected to play out. Robust production growth from many of its clients like TVS, Hero, Maruti, and increasing adoption of LED lighting is what is aiding numbers for the company. But all in all, very strong set of numbers, and outlook going forward is also very positive. Dollar Industries meanwhile has also reported strong set. Revenues up 23% on a year-on-year basis. Margins have expanded to 11.4% versus just 2.8% that the company had reported same time last year. Numbers across the board are very strong. Despite some cost pressures that the company was facing, company has reported strong set. Action Construction Equipment, or ACE, has also reported very strong set. Revenues up 36% YOY. Margins have expanded to 15.5%
versus 11.9% that the company had reported same time last year. And if we look at full year FY24 numbers, they also look very strong. Revenues up 35%, PAT up 90% for full year FY24. So all in all, very strong set. FIAM, Dollar Industries and Action Construction Equipment, all these stocks will be in focus on the back of strong set of numbers.
Okay, Shesha, thank you so much for that update. Keep an eye out on all those stocks today at 9:15 a.m. and see where they're moving in trade. But let's move on and talk about what's happening in the world of futures and options. What should we be watching out for today? Ansh is joining in with us as always. Ansh, good morning, and what's the FNO snapshot looking like today?
Good morning, Vinny. So let's start with Nifty first. Index advanced for fourth consecutive session and it has been forming higher highs from last 6 to 7 session, indicating very strong strength in the market. Also, the all-time high level is just 1.2 to 1.3% away from current level, which is a bit low than 22,800. But this is the same level where we faced resistance 2 times previously. So this is a level where we may face some selling pressure in coming sessions. Now, if we talk about option front, we are seeing call writing happening at 22,600 strike. So option traders are expecting Nifty to take resistance around this level, whereas on downside we are seeing some put writing happening at 22,500, indicating good support base around this level. Currently we are around 22,530, so 22,500 is the very near level. Now if you talk about Nifty Bank, the index has been hovering between 20 and 50 DMA from past 4 to 5 sessions, and 20 DMA is the level which has been acting as a strong resistance. Even in the previous session we saw strong selling pressure coming in from the 20 DMA level as well, which is around 48,300. So this is a key resistance level which one should watch out for. Whereas on downside, 50 DMA could act as a good support, which is around 47,750. Now if we talk about option front, today we have weekly option expiry for Nifty Bank. So we may see some volatility in the market just before the market close. So here we are seeing a mild call writing happening at 48,200, indicating some resistance around this level. If we talk about top mover of Nifty Bank and also of Reliance, HDFC Bank is one which one should watch out for. So the stock is actually in a range bound from last 9 session. Stock needs to come out of this range to give a clear direction, either above that 1480 level or below that 1420, 1425 level. Now if we talk about FIIs, then in previous session in index future, they added around 21,600 contract. They covered around 12,800 shorts. So net to net we are seeing addition of around 34,500 contracts almost. In value terms, if we'll check, then in Nifty Bank they added around 560 crore, whereas in Nifty they added around 1,600 crore, which is 3 times of Nifty. So here we are seeing they are getting very bullish on Nifty. Also, if we talk about a few stocks in focus, then in index future we are seeing FNO stocks that are in focus. Here we are seeing long build-up happening in Balkrishna Industry, Aditya Birla Fashion and Vedanta, where a short build-up for Astral, MCX and City Union Bank. So keep an eye on the stocks.
Absolutely, Ansh. Thank you so much for that FNO snapshot. Keep an eye out on all the stocks also on the back of FNO. Let's move on, talk about Nykaa. They are set to report their numbers. And what we're expecting, a good growth, 26% growth in terms of revenues. We did have the Q4 update, which already highlighted that we would see a revenue growth in those high 20s. 26% growth is the expectation coming in. Also, in terms of what the company highlighted in Q4, that they're expecting a strong GMV growth in early 30s at a consolidated level. Moving on, we're expecting a sharp jump in terms of the profit, 11.4 crores versus just 2 crores last year. So almost a 6 times growth in terms of the profitability on a year-on-year basis. Fashion is expected to see a growth in terms of their overall performance, expected to gain market share in the fashion business sequentially. Yes, maybe we could see an impact because Q3 normally is a better quarter. There's a lot of festival season that is going on and seasonality play comes in where Q3 is much higher than Q4. So sequentially, yes, but overall year-on-year basis, we're expecting a growth there. Margins, EBITDA margins are expected to be flattish, while in the BPC segment, they are expected to remain resilient. Let's keep an eye out on that. Any commentary that comes in from the BPC and the fashion segment from the management is key to watch out for in terms of an outlook going forward, as well as expectations of when will they break even in the fashion business, what is the expansion plan in the international side, is key to watch out for in terms of the commentary that one should be watching out for from Nykaa, especially on the fashion side as well as the demand trends in the BPC segment.
Absolutely, and there's a lot of other earnings that you should be keeping an eye on. But Janae standing by for now with a roundup of which stocks you should keep on your radar this morning.
Yes, so first up we have Greenply Industries. The company has came up with the reports, a good set of numbers. The revenues came in at 600 crores versus 427 crores, which was up around 40%. The net profit also saw a growth of around 96% on Y&Y basis, which came in at 33 crores versus 73 crores. We also saw an operating margins improvement where the EBITDA margins improved at EBITDA was up around 23%, came in at 60 crores versus 48 crores. Moving on, PI Industries came up with a poor set of numbers. The revenue was down around 8% on Q-on-Q basis. The net profit was down around 18%, came in at 369.5 crores versus 448.6 crores. And if we talk about operating margins, the margins also saw contraction, which came in at 25% versus 29% on Q-on-Q basis. Moving on, other news, Aptus Housing Fine. Aptus Value Housing will be in news as promoters are looking to shares worth around 1,028 crores. And the top buyers are SBI Mutual Fund and East Bridge Capital Market Fund. Moving on, HG Infra will be in focus as the company has been declared as an L1 bidder for Maharashtra State Road Development Corporation for their two projects worth around 3,209 crores. Also, PNC Infra has come up with an declared with L1 bidder of Maharashtra State Development Board for two projects worth around 4,994 crores. Also, GR Infra, keep an eye on that as the company emerges as a lower bidder for two projects worth around 4,346 crores.
Okay, Junai, thank you so much for that update there and all the stocks that we are keeping on the back of news flows. But let's move on and talk about Paytm because that's also set to report its numbers. What is the street penciling in this time? What is the expectation? Gaurav is joining in with us to give us those details. Gaurav, what should we expect from Paytm now?
Well, yes, Paytm has always been in focus because if you look at the stock price also, in December it was hovering somewhere near 900 rupees level and now it hovers somewhere near 350 rupees level. And there have been multiple headwinds in Q4 itself. So for example, Paytm also reduced its small ticket size loan exposure. At the same time, RBI asked Paytm to stop onboarding new customers, and at the same time, there was the nodal account was also going to get terminated. And apart from that, if you look at all these impact, let's see what Street is also expecting from Q4 results. Now they're definitely expecting some kind of fall in revenue as well as EBITDA. So what they're expecting is a 7% fall on a YoY basis is what we can see in Q4 in terms of revenue, while EBITDA can go down almost by 70% on a YoY basis. What they're expecting is that the highest impact can be seen on lending and financial service side when it comes to revenue. And if we talk about disbursals also, we know that Paytm actually stopped disbursal of loans in February and March, and on back of this we may see disbursals going down almost by 68 to 69% on a quarter-on-quarter basis. If we talk about Paytm's GMV value, that was growing somewhere near 43% for the last 2 years if we look at the 2 years CAGR. But Paytm's UPI market share has also fallen in April. Now it stands at 6.2%, and on back of this we may also see some slowdown coming up in the GMV CAGR it's GMV CAGR growth from here on for Paytm. And lastly, if we talk about adjusted EBITDA also, the street was expecting Paytm to report adjusted EBITDA in a positive way from here on, but we may see FY25 being a negative EBITDA, adjusted EBITDA for Paytm once again. And now street is also expecting the profitability to get delayed to FY27 or FY28. Lastly, let's also watch out on what they are expecting from management. They're expecting some kind of commentary when it comes to the ban and how it is going to impact. They're also going to look at the commentary for the revised growth target that the management is going to give. And lastly, they're also going to seek for an update on online merchants from the management when it comes to Paytm. So all in all, street is already expecting some fall in the revenues. We have already seen that the stock has also reacted negatively for the last 3 months, but definitely watching out on how the management commentary comes out for Paytm numbers.
Alright, then thanks Gaurav for that update. So keep an eye on Paytm, but then Sun Pharma is also all set to report its Q4 results. 16% growth in US sales is what is being penciled in, and also margins are likely to remain flat. Srishti is standing by with an update on what exactly the street is expecting from the pharma major this time around. Srishti?
So we're expecting a decent trend from Sun Pharma because though on a sequential basis we are not expecting a significant jump, but on a YoY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YoY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the G-Rev limit as well. But apart from that, in the domestic business we are expecting a growth of 10% on a YY basis. And actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis, there could be just a flatter sort of a growth, but on a YY basis, a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. So, and how are they seeing the outlook for the specialty sales, not just in US, but in the rest of the markets as well. So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
All right, thanks Srishti for that update coming in. Let's also take a look at what the brokerages are saying on a host of counters, starting with Hitachi Energy. And Goldman Sachs' view is that they're maintaining a buy target at 8,250. And in terms of the revenue, they're looking at outperformance offsetting margin miss. Also, they're saying that the double-digit margins for the first time since Q2 financial year 20 is something that they're penciling in. Now, when you look at JB Pharma, Jefferies has come out with a note and they're maintaining a buy. They've also hiked the target to 2060. In terms of the India business, they're seeing high teens growth in financial year 25, and also in terms of EBITDA margin guidance range for the same quarter, for the same period, they're hiking it to 1%. So financial year 25 EBITDA margin guidance range is hiked by just 1% for JB Pharma. Now let's also take a look at the credit card data coming in, and when you look at what Jefferies is saying, they're talking about spending growth further slowing in April. SBI card spending share also rose marginally is the word coming in from Jefferies. And in terms of higher spending share on a month-on-month basis, they've got three counters: Axis Bank, ICICI Bank as well as Kotak Mahindra Bank. And for these three banks, they've seen higher spending share on a month-on-month basis. Lastly, when you look at the fall in spending share, HDFC Bank and IndusInd Bank are the ones that Jefferies is highlighting on account of month-on-month basis fall in spending share. So that's the word coming in from Jefferies as well.
Okay, and with that, we're absolutely out of time on this edition of Market Cafe. So it's a goodbye from Shreyansi, myself, as well as the team who put this show together. Don't go anywhere. The markets will take action forward.